Good morning, everybody, and welcome to the last week of the GoPro Academy 2020 Trading Challenge. I hope you guys are keeping head above water. We haven't been keeping a leaderboard, as some of you have asked me about that. And the reason is, from past experience, I find that people who are sort of maybe dropping behind tend to lose focus if they see that they are behind. Which is a pity because very often those people come from behind and end up potentially placing or even winning a challenge. But it's better not to know where you are at until the very end when it comes to a trading challenge, certainly. In any case, we could try a variation on that in the future. But well done for those of you who have kept going and stayed consistent throughout the last 4 weeks. We're into now, of course, our final week. And I'm looking forward to seeing the final results. It certainly has been a time where we didn't have significant market movement despite the US elections earlier on in November, which was very different from 4 years ago, and a bit of a pity. But on the other hand, when it comes to a trading challenge, what I like about the conditions we've had in the last month is that it really does, as I've said before, separate the sheep from the goats, so to speak. It has not been easy trading conditions, and to have come out of it with a small profit in the last month is actually a relatively good achievement if you've been able to do that. Right, so let's jump into our market review, starting as always on the euro. Looking at the weekly time frame here, Johanna, I see you've commented in the community on this. So we have a weekly sideways movement still on the Euro USD. There is a potential test of this resistance level taking place or will be taking place during the course of this week, or maybe even today. Certainly Friday was pretty bullish with that impulse candle, but whether or not it is the start of a bullish trend remains to be seen. So the market hasn't yet proven itself. It's not a valid W pattern because we do have an inside C close. It's not an outside C close. So I wouldn't go for that. If you are taking a more aggressive stance with the fact that we've got this close outside of the B points, because obviously we had our D close above B on Friday. If you want to take that as a potential signal for a daily impulse, it's not strictly within the rules, obviously. So as long as you've tested it and you're being consistent, then fair enough. But that would also tend to indicate that you should have gotten long already. So I'm not again going to speak to strategies this morning. This is really just a market review based on our advanced price action technical analysis. But certainly when looking at it on the daily time frame, you can see that that very strong candle on Friday did give us a bullish breakout for the daily time frame. And of course, if your strategy needs that, then well, Bob's your uncle. You're ready to rock and roll, depending on what kind of strategy you are trading. All right, so that's the euro. A lot of the pairs still are just floating sideways, as we will see. This is obviously the cable where we had a pullback through the course of last week, and we had an inside close. It was just inside close, obviously, on Friday evening, where this bearish candle failed to respect just the support level of our potential X, our current A. So if you are a continuation strategy trader, this is something that you might be looking at. The other thing to bear in mind is that we did have an outside open this morning. We've got a little bit of a gap here over the course of the weekend. So what I would generally recommend is that you take the close and you match the open to the close. But what some people do is they say, well, okay, if that's the gap on the weekend, then over the weekend, this support level has in fact been overall respected, and that's fine. You know, these sort of very sort of tight determinations where you've just got a few pips either way. As long as you're consistent in how you treat these, I don't think it's a big deal, to be honest with you. But because I program things and we have it all in an automated fashion, obviously even a tenth of a pip counts. All right, but that's entirely up to you. So that's GBP/USD. I'll just quickly look at some of the weeklies. This is in fact a bearish bat pattern between a bat and a Gartley. So one of the things that we are going to be doing in the launch of our technical analysis modules in the academy is we're going to be referring to how to trade the harmonic nature of the market, and that'll be matching up in the strategy center with our advanced harmonic patterns. So that's currently in the works, so look out for it. I can't promise that it'll be available before the end of December. I was hoping to have it as a nice Christmas present for you guys, but we'll see. Let's take it as it comes. All right, so it's GBP/USD. Moving on, I'm not going to be spending time on stuff that's really going sideways, such as the dollar yen. You know, nothing really to talk about there. If there is anything you'd like me to look at, please do pop it into the chat box. Right, so Terry's asking if we've got a sound problem. Everybody okay with sound? I guess so. All right, we'll have a look at cotton towards the end. But yeah, please just pop in any instruments that you'd like me to specifically have a look at. So yeah, as I say, dollar Swiss, you know, a couple of people again have been looking at that as an M pattern because we did have that breakout last week. It's still inside the channel, and our M pattern isn't actually valid because we didn't have an outside bearish C close. So strictly speaking, that's a no. USD CAD also not worth looking at. Then the Aussie, of course, we were talking about before. On the daily time frame, again, we're still seeing this resistance level. I beg your pardon, on the weekly time frame, we're still seeing this resistance level being respected over here. Yeah, let's just keep an eye on that for the weekly time frame. Let's see what happens during the course of this week. But on the daily time frame, you can see certainly for the channel traders, we did have a breakout, and this has been tradable through the course of last week. And many of you folks are in fact in a lower time frame bullish trade over here. So that's that one. You can see that we are in fact outside of the channel. So technically we're in a potential trend here. We don't have an established trend as yet. It's just a breakout. But of course, Kiwi we were looking at for some time, where it has been outside of certainly the four-wave channel for quite a long time. And even the W pattern is still pretty robust. The movement during the course of the week was reasonably okay, certainly better than the preceding week. So many of you guys have been in a bullish trade here on the lower time frames. And of course, also we did have the daily impulse that we were talking about last week, and that should still be ongoing. But certainly you should be at break even on this one already. Again, I don't want to get too much into the strategy discussion here, but clearly this is a very favorable, these are very favorable conditions for trending strategies, and certainly the impulse strategies where you use multiple time frames. And yeah, it's been ongoing for quite some time, as you know from our previous discussions. So one of the best instruments to have been trading recently. Euro yen, nothing. In fact, the yen pairs generally nothing. Just cycling through them very quickly here. You see I've taken the liberty this morning already of drawing in the next wave, simply because this would now have to be an additional wave. Even if this does roll over and come down again, we'd certainly have a bullish wave there. But regardless, you know, it's not tradable. It's certainly not for our high quality price movement strategies. Yeah, CAD Yen, likewise, nothing worth looking at there in terms of trending strategies. Aussie Yen, so again, the Aussie and the Kiwi showing a little bit more strength than the others, not so much the Aussie, but it is testing the upper resistance level of the channel. So keep an eye on it, but of course today, nothing doing. It's not doing a very good job of it so far this morning. But here we go again with the New Zealand dollar-based pair against the yen. Yeah, look, it's again, we did have that channel breakout. You can see that although we did have a pullback through the course of last week, it continued to respect this preceding resistance level as support. So, again, strongly bullish on the New Zealand dollar here, which has been our strongest currency now for quite some time. Nothing doing on Euro GBP. And of course on Euro Swiss, which is more of a loonie in the last few years than the loonie itself. We don't trade this, as I mentioned before, as a rule, but it is important in assessing strength and weakness across all the different currencies. And just as a quick aside, probably the right time to talk about it now, one of the things that I am going to be doing some more detailed training on is how to develop your currency strength analysis. So looking across, if you were just to look across the 8 main currencies that we trade, all the way from the euro and the US dollar down to the New Zealand dollar and everything in between, those 8, that when combined with each other gives you 28 different currency pairs. Some of you guys have seen how to do the price action currency strength analysis. I'm going to be doing some training on that through the course of December for our Academy members. So that's something I think that certainly in the last couple of months has really helped to separate people who are doing really well given the conditions with a lot fewer trades, because using the currency strength analysis, you will find yourself with an additional filter where even if on the surface of things with our other selection criteria might be met, your currency strength differential is not met, then you wouldn't actually take a trade. So that's certainly been very useful for any traders in the last month or so, and certainly in 2 months. All right, so Eurocad, again, nothing worth looking at. I'm just going to go through these quickly. Euro Aussie, nothing, and shall we come back to our Kiwi pair again? So just about anything against the New Zealand dollar, you can see has got directional bias. This is pretty weak by comparison to the others that we've looked at. Again, this is not as strong a movement, but so far, and we're actually looking right now at a retest of this preceding what was support, now resistance level. Let's see what it does. But, this was not a very strong break below that support level. It was initially basically respected last week, Tuesday, Wednesday, we got the break below. It sustained itself, but it's been, it basically pulled back on Friday. So nothing very spectacular here. This is a wait and see. For continuation traders, if it respects that resistance level, then we could be seeing a setup possibly for tomorrow. But in any case, not very strong. But oops. Again, the New Zealand dollar strength showing itself there. Right, so moving on to our Gbp Crosses, Gbp Swiss, nothing worth looking at. Gbp CAD, nothing. All very sideways, unfortunately. Gbp Aussie, likewise. The pound has also shown some strength, as we discussed before, over the recent past. And pretty correlated with the Aussie at the moment. Right, and again, here's our New Zealand dollar cross. So, nice bearish movement over here. We had that channel breakout that we were looking for potentially a week ago. It did happen. So those of you trading lower time frames probably jumped into a trade on Friday morning. It's pulling back now, obviously, so typical Monday morning behavior, but you just have to follow your rules. Let's just have a quick look at the weekly. So we have had a bearish breakout on this. So for those of you who need to have a potential trend on weekly to be able to trade, such as on the daily impulse, well, there you go. So not looking fantastic at the moment for a daily impulse, but we're not here to predict the market. We're here to follow our rule set. Okay, so moving on to the other crosses. I'm not even going to bother. You can see I didn't even bother updating all the analysis on some of these because they're so flat. Aussie Swiss, likewise, not particularly impressive. We don't have anything outside of the channel or any valid W or M patterns on any of these. Aussie CAD's just testing that resistance level again. It is a valid W pattern. So if you're using that, you are probably in a trade already on the lower time frame. So nothing wrong with that. But certainly if you look at the channels, and both on the weekly and the daily time frame, not really worth looking at, but certainly for WM traders, that's fine. Aussie Kiwi, here again, we've seen the relative strength of the New Zealand dollar, even against the Australian dollar. I'll talk about that correlation in a second, Mina. But yeah, I mean, this is a valid trend. You can see that last week we had what was a support level, basically us respected here as resistance. But since then, it's really just been going pretty sideways. So I spoke about a lower time frame entry, I think last week. That went on to hit take profit levels for most people. Again, depending on your rule set. So not going to delve into that. Looking quickly at Kiwi Swiss. Yes, we have had a channel breakout on weekly. I think we did speak about that. So yeah, depending on your strategy, you may well have been looking for something and you would have got it last week. But also, you know, since then it's just really started floating sideways. So not very impressive. We only had one bullish impulse candle through the whole course of last week. We've also seen a breakdown in sequentiality of cyclicity over here. So, I think we're busy seeing it, I should say. So yeah, nothing particularly spectacular there at all. But a little bit better on our New Zealand dollar, Canadian dollar, where again, I think many of you have had a lower time frame trade. Also looking on the higher time frame, you can see our weekly selection criteria met for channel traders, as we discussed already last week. So you should be in something over here, either on the higher or the lower time frames. It's certainly, again, you know, New Zealand dollar showing its strength here against the Canadian dollar. Okay, last one, just outside of the currencies, is gold. Continued in a very strongly bearish direction. Continuation traders had a nice entry, which triggered on Friday. Depending on your take profit, you may well have hit that already. Certainly, you know, this morning it made a new low. So yeah, gold weakness here, very interesting. Once again, also in the light of what's happening on the cryptocurrencies. We saw the expected correction on Bitcoin last week, Bitcoin being the new digital gold. But Bitcoin pushing up back towards those recent highs and, in fact, the longer term all-time highs as well. So, yeah, fundamentals there, I think, far more fundamental supporting the strength of Bitcoin than gold. Right, excuse me. Okay, so let's have a quick look at cotton. Let's get all the way down there. So just looking, first of all, at weekly, which we looked at previously. So this, again, I mean, if I haven't updated the analysis over here, but we are in a potential impulse wave here on weekly, but likewise, it's a valid W pattern, and you will be outside of your 4-wave channel as well, your 4-wave channel being somewhere down here. So most definitely a valid pattern on the weekly time frame, on the weekly for trading down on the daily time frames as well. A little bit messier here, even though we had that test of that resistance level through the course of last week Tuesday, I think it was, but it didn't sustain itself above that level, so it has fallen back again. But once again, what is your rule set? So if you're trading this on a W pattern, then Friday's close is valid. So let me just quickly draw these wave lines in. again, I don't really want to spend too much time on the strategies per se, because that's not what the market analysis is all about. But here we go, just a quick update on a 4-wave channel for the daily time frame, looking at our 4-wave 13 candle historical Donchian. So, okay, yeah, look, it did come back inside of that channel, you're quite right. From a point of view of trading the channel, it failed to sustain itself outside of the channel. If you're a channel trader, then that was not actually a valid entry first thing this morning. But if you are trading this as a W pattern, then it is, because we don't look at that. We're simply saying, did we get an outside C close? And we did. All the closes between B and the final C, and in fact, even into CD, are outside or above X. So that would imply, therefore, that this is, in fact, this morning was an entry. So hopefully that answers your question, Pino. Muna, is there more value in keeping an eye on VIX? I think why when trading S&P 500 USDPs. Well, to be honest, I did use VIX in the past, but didn't really see massive benefit on that. Obviously, any volatility index has some information that is useful, but is it enough to really increase the size of your edge or your expectancy in your trading strategy? My advice to that is to test various options. I felt that the amount of additional analysis required didn't really add any value to my edge, but that doesn't mean to say that there isn't any. What I would also point out is that I do like to look at the ATR as a measure of volatility. It's much simpler, but hey, it works, So I've mentioned it many times in the past. When we see the average true range on an instrument dropping below a certain level, it's almost impossible to be profitable on it. My most difficult trading period in my trading career saw a sustained low level of volatility across all the instruments in the market back in 2014, I think it was. And yeah, it was extremely difficult to make money. We saw the 21-day average true range on the euro drop to below 40. The average is around 100. So there is definitely use in looking at various measures of volatility. You don't want to be trading markets that have very low levels of volatility. But having said that, that on its own is not enough, because you could have very choppy markets where you have large movements, but countering each other. So bullish, bearish, without any sustained direction. We saw quite a lot of that earlier in the year with the COVID announcements. You saw very strong bullish moves followed almost immediately by bearish, and vice versa, depending on the instrument. So yeah, it's not something that I would use on its own, but certainly having some volatility measure is definitely of use. Whether you want to use the VIX or the DXY, or even, as I say, something even simpler like the ATR, just test it. Testing. That's the name of the game, always, as a trader. Next question: how reliable is the direct correlation between S&P 500 and Aussie Kiwi? Well, I don't. Certainly on the Aussie and the Kiwi, I wouldn't say that they are reliable. In fact, I would not assume that there is anything in the market in trading that is reliable. Nothing is reliable. It's safer always to assume that you can't rely on these measures. And that's because we always start in our trading, we start off with a foundational principle that anything can happen. We start off with a fundamental foundational principle that we are dealing with absolute uncertainty, that it is impossible to know things that we would like to know in advance. Some things can be known reasonably reliably in advance, but they generally have very low benefit. And the cost of relying on something like that long term is very high. Of course, that is the very definition of a concave optionality curve, where you have limited upside, but potentially, but hidden, a huge downside. I've spoken about this in all sorts of ways in the past. You'll remember, including something like, wearing a seatbelt. I'll reiterate that. I spoke about it last week or the week before. Wearing a seatbelt is something that has very low benefits in the short term. But the potential cost of not wearing a seatbelt in the long term is huge. In fact, potentially infinitely high. So you may never have that car accident and then never then be able to look back on your time in your driving career and say, oh, well, that was a waste of time. But it only needs to be useful once. And that's why we adopt an approach in trading which doesn't depend on anything except this thing called a convex optionality curve, where we always seek to limit downside first and look to maximize upside. And we simply find ways to position ourselves appropriately to take advantage of that. And that is really the sum total of our approach to trading and our approach to dealing with the unknowable unknown generally. So I don't rely on any kind of correlation at all, to be honest. So hopefully that answers your question. And I think what you mean with the S&P 500 as well to the Dow, no, likewise, there's definitely there's commonality between the two. You do have stocks that fall into both, but no, I wouldn't rely on correlation. Other people have looked to trade the different oil indices against each other, because clearly you would expect the different oil indices to be highly correlated, and they are 99% of the time. But the 1% of the time that correlation fails is the time where you potentially can blow your account. I would refer you as well to that story in Nassim Taleb's book, Fooled by Randomness, where he compares the two different traders. And trader John is the one who made a lot of money until he lost it all. And I think Taleb is basically referring to an analogy, or creating an analogy there, to long-term capital management. When he wrote Fooled by Randomness, it was literally just a few years after the collapse of LTCM, which almost brought down the US financial system, all because they were relying on correlation. And that's that. Yeah. Okay. So, guys, any other questions or any other indices you'd like me, or instruments you'd like me to look at? You're welcome. You're welcome. Let's have a quick quiz at what has been happening with Bitcoin. So obviously Bitcoin over the weekend, I mean, Bitcoin does trade throughout the whole weekend, but the broker is not reflecting that. So we've seen it come back quite a lot again. We really did expect a retracement. That very strong rally up to the resistance level, the all-time high on Bitcoin through the early part of last week, was really begging for a correction. You'll see in our other group as well, I did point out that we're expecting volatility at this level, and boy, oh boy, I called that one right. But it was really just a buying opportunity, and you can see how many people have used it as a buying opportunity, because it's rallied back towards the $18,500 mark pretty quickly. So yeah, still very strongly bullish. It didn't even come down to testing this previous resistance turn support level. Didn't even get that far. Got quite close, but certainly turned around pretty quickly. But again, we don't try to predict these things. We just position ourselves appropriately. All right, guys. So yeah, quite a quick one today. As I say, this is the last market review for the trading challenge. Just a quick FYI, we will be moving all of the trading that we've done over the course of the last month or so into a group for folks who participated, and we're going to build on that. And I'll be communicating with you guys through the course of this week and or next week as to what we're going to be doing going forward. So there's quite a lot of stuff happening with the Academy at the moment, not least, as I mentioned before, access for you guys to funded accounts where based on your trading, you have the ability to build it up to a total of a $2 million fund, trading somebody else's money. So obviously that's a very attractive option that we're looking to make available to you guys, amongst others. So please do look out for that. We will be chatting to you guys through, as I say, the course of this week and next week, and go from there. All right, so folks, enjoy the last week for the challenge. Remember, always look to limit your downside first. Once you've looked after that, you can let the upside look after itself. Have a great week further. Chat to you soon. Bye for now.